One thing that we saw that was pretty crazy when we had all the lockdowns and we had the pandemic is how all these things changed and everybody expected everything to remain that way indefinitely. So for example, everybody got to work from home and they thought that that was going to remain that way indefinitely. People didn't have to pay their mortgage and their rent. They thought that was going to remain that way indefinitely. Student loan borrowers didn't have to make any payments for close to 4 years and they thought it was going to remain that way indefinitely. Just because of a temporary emergency, everybody thought that we were going to have permanent, moratoriums on payments and, you can work from home forever, no big deal. But what we're actually seeing 4 years later is all of these trends that we saw during the pandemic start to reverse. And one of the big ones has obviously been return to work and the end of remote work for a lot of people. And one thing that's happening now that more and more people are being forced to return to the office is they are complaining that it is so expensive to commute to work that it's now costing them more than their monthly grocery budget. I mean, that sounds pretty insane, guys, but let's take a look at this and see if there's any validity to this claim or it's just a cry for help to just try and stay at home more. I don't know. Now, there was a recent survey from a company called Better Up, and they found out that the amount of remote jobs recently have been cut in half, and 25% of companies are reporting that there's an improved connection and culture at work as people are mandated to return to the office. So that's not a very big percentage, that's 75% saying that there is no improvement in performance and connection at work, which is not really a good thing for the company. So they surveyed a bunch of people who were mandated to return to the office, and what they found was these people had higher burnout, higher stress, and turnover intentions, meaning that they want to leave the company. Although the recent quit rates declining as much as they have indicates otherwise, that even though people might say they want to quit, they're not actually quitting, because we saw a big slowdown in the amount of people quitting their jobs in the last quarter of 2023 due to the slowdown in hiring, the slowdown of the amount of good jobs that are actually available. And what they found out from this survey, unfortunately, is that the return to office transition is often not handled with a high level of humanity, sensitivity, and empathy. As a result, workplace culture suffers and the workplace's sense of belonging also plummets. So basically, when companies just rip off the Band-Aid and people were going from working at home full time to saying now you got to come back 5 days a week, that's probably the scenario that gives people the worst taste in their mouth. There's no easing back into it. There's no, let's start with 2 days and maybe 3 days and see how that goes, or do it performance-based. They just say, nope, you're back. That's what UPS just did, actually. Here we have a house for sale for $4.65 million. They listed in the beginning of November for $4.8, lowered the price $150,000, still no takers. But look at the history of this house. In 2013, they bought it for $1 million, and then back in 2011, only $390,000. So wow, this place has gone up exponentially, and as a resident here, I just don't see the value, guys. Even when these houses were trading at $1 million, like, yeah, you're on a small canal, you can have a little boat back there, whatever, but you pay sky-high insurance to be on the canal, and you paid $1 million for the house. That's like top of what it should be worth. Now people are trying to get 4 times that with a property tax bill of $20,000 a year, and I guarantee you, when they buy it for $4 million, that new property tax bill is going to be almost $100,000 a year. But naturally, a lot of these people don't actually want to return to the office, so I kind of question how valid is the information they gave to this survey, because a bunch of people were complaining that their bank accounts are suffering and their whole routine is being disrupted now because of these return to the office mandates. Now, first of all, they say that there are benefits from returning to the office, people having better working relationships together, improved communication between co-workers, which is not really a big surprise. But more than anything else, most people are complaining about the commute back to the office. They're saying that anybody who has a 30-minute commute or more to the office are much more likely to be higher stressed and angrier people. And they even go on to say that if you have a 45-minute commute or more, then that's linked to poor mood and poor overall health and well-being for people. And people are complaining about the most mundane things too with their routine. They're saying, well, you know, you lose the loss of flexibility when you can't work from home anymore. Like, you can't accept a delivery, you know, meaning like getting food or an Amazon package, or you can't switch the laundry loads between meetings. Those things save people a lot of time because they can just do it all while they're at home. Well, newsflash, nobody could ever do that before the pandemic if you were working in the office. So people have basically gotten spoiled, right? People have gotten used to working from home, and now they're upset because the company wants things to go back to normal, but they don't. Just like the student loan borrowers that don't want to pay back their debt. They just wanted to stay in fantasy land and, oh yeah, it's all forgiven. You don't have to pay anything. Same goes for people who thought they could live for free forever in their house. They could just not pay the mortgage for 4 years or not pay the rent, and let's not worry about getting evicted or anything because we're just going to be able to stay here forever. The biggest thing they're complaining about is that they say the average employee right now returning to the office is spending $561 per month on transportation and additional child and pet care and domestic assistance, which is on par with the two-person grocery household bill in the US for an average month. So that's where we get this whole thing of returning to work is now more expensive than eating. But really, it's not just eating when you break it down. They're saying, well, we have to pay now for more gas and parking, and we have to pay the babysitter now. We need to have childcare. We need to have somebody walking my dog since I'm not home anymore. And the list goes on. But once again, guys, people who never worked from home before the pandemic had to pay for all that stuff before, right? Well, now it's going back to that. You have to pay for it again. If your company requires you to come back in, it's really that simple, unless you can find a different remote work job. And I understand that remote work is something that's been around for a long time. It's not like a new thing. But the problem is jobs that were not remote before the pandemic and temporarily became remote, people have now gotten used to that and thought that that was going to remain this way forever. But it really is eye-opening to see just how many people thought that all of this was just going to remain this way, guys, and people were going to continue getting free money. No one's ever going to have to pay for a place to live, and now everybody's shocked that that's not going to happen anymore. But if you are somebody that has to return to the office and start commuting again, you need to be careful, guys, because there are a record amount of people right now who are out there driving without car insurance. And obviously the reason is because most people can't afford it because it's going through the roof. But let's take a look at this. It was found out that about 45% of young Americans say that they thought about going without car insurance, and about 1 in 5, or about 17% of people surveyed between the ages of 18 and 34 say that they're already driving without insurance. And I guess I'm not alone, because you know, I saw my car insurance jump substantially in 2023, but not even as much as the average. Turns out that the average car insurance now for the year in 2023 is over $2,000 a year, guys. $2,019 a year to be exact. Wow. Who knew it was going that high? That's a 24% increase from 2022. That's about 2.6% of the Americans' median household income. So it is a significant climb and is now starting to take up a big chunk of people's monthly budget. They talked to one single mom here. She says she can no longer afford her car payment and her monthly insurance. She's had her car hit 3 times recently, and she was not at fault all 3 times, but yet her insurance rate got jacked up. And that is the unfair thing about insurance. Even if your car doesn't get hit, you can still expect to see an increase. But the most unfair thing is when, you know, you're in an accident, it's no fault of your own, but the insurance company still bumps you. She said the first 2 times it happened, the car was parked. She wasn't even driving the car and it was damaged. And that the 3rd time, her car was involved in a drive-by shooting. So I'm not sure what this lady's doing, but it sounds like she probably doesn't live in a very nice part of town. So after the 3rd claim, she was dropped by her insurance company, is now forced to go with a new company charging a lot more. You know, one thing that's interesting too about car insurance is it typically gets cheaper the older you get. Like, when you become a homeowner, you can get a discount for that. When you get over the age of 21, usually they'll start going down a little bit too. If you get married, there's a discount for that. So there's like different discounts and ways for your insurance to go down as you reach new milestones in life. Well, I guess not when you get past the senior citizen age, because they talked to another guy in Georgia who's 73 years old, and his insurance was already almost $2,000 a year in 2022, and then in 2023 shot up to $2,900, guys. So went up an additional 33% in 1 year. This guy's a retired senior citizen, living paycheck to paycheck, and he said he was in an accident in 2022. It was a hit and run with the other driver completely taking off, fleeing the scene of the accident, and that gave him that $1,000 increase. And so what he did is he did what I did, and he cut his car insurance benefits in half to try to compensate for this. And the problem is, guys, is the insurance is getting so expensive, and you can only lower your coverage so much because, for example, if you have payments on a vehicle, if you have a lease or you have a car payment because you finance the purchase of the car, a lot of times you have to have full coverage. You have to have comprehensive and collision coverage on your car, which can be significantly more expensive than just carrying liability coverage. So that's just about everybody on the road. Similarly to when you buy a house and you have a mortgage, you're forced to have homeowners insurance. So all of this is a big scam, by the way, as you can tell. The only way to drop things down to having liability coverage only is you need to pay off the car, and then you can drop it down. But the problem is, if you don't have the actual money, the actual cash to fix your car up in case something happens and you're underinsured, well, then you could see a total loss on your car and you won't have the money to fix it. So you'll be forced to buy another one. So everybody wants to know the same thing. Why are insurance rates increasing so much? And of course, they have a slew of excuses of why. Everything from, the supply chain issues during the pandemic, and then the labor shortages, inflation, not sure what any of that has to do with insurance. Some of the more reasonable excuses are things like the repair costs for the cars are higher, as well as car prices are higher now, which is a little bit understandable, I suppose, for somewhat of an increase, but not to the level that we saw. But of course, there's no mention here of an increased number of EV vehicles on the road, which we know for a fact contributes to higher insurance rates pretty dramatically, because number one, they're way more expensive to replace or repair if they're in an accident. And if they're in an accident, there's much more damage because these cars are so much heavier. Those are just facts. I don't care if you love electric cars or you hate them. That's just a fact that cannot be disputed. But they don't mention that here, guys. Just another thing that is conveniently left out while they're trying to tell people everybody needs to be driving an electric car. They're already more expensive to buy, they're more expensive to charge, and now you're supposed to pay more for insurance too? This house is so big I have to back up just to get the whole thing in the shot. Here we have a house on the open bay. Wait, let me correct that. Not a house, a palace, 14,000 square foot palace for $33 million. They just listed it in December. Started off asking $36 million, already down $3 million. That's one hell of a price cut. But look at the history of this house, guys. It has been an intra-family transfer since 1974, and they originally bought this piece of land for $125,000. So literally since 1974 to now, 50 years later, they're turning this into a $30 million profit. Let's see if they get it. That'll be an interesting one to follow up on in the future. And their property tax bill is a whopping $140,000 a year. But what the insurance industry is seeing right now is more and more people looking to save money on insurance any way possible by cutting down coverage and lowering coverages down to the state mandatory minimum, basically, just to be legal. And you know what's interesting, guys? I don't know if this is like this in every state, but I have two cars. I have a Jeep and I have an old Camaro. And I decided to drop the coverage on the Camaro entirely when I was going through this whole dispute with the car insurance, because they were charging me the same amount basically to insure this old Camaro as my brand new Jeep, which makes no sense because the replacement value of the car is nil compared to that. So I decided to drop the coverage, and what happened is about 2 or 3 weeks later, I got a letter in the mail from the DMV in the state of Florida saying, hey, listen, you need to put insurance back on this car by January 26th. Otherwise, there's going to be a fine and we can suspend your driver's license. So I don't know how serious that threat is, or if they would actually suspend my driver's license for not having insurance on this car. But just know that if you're trying to beat the system, so to speak, and just not have insurance and skate by without it and be an uninsured driver out there, that states have the power to do this. They can revoke your license, and if you get pulled over, not only are you going to be ticketed for not having insurance, but you're probably going to get arrested for not having a valid driver's license. So what is this doing? It's causing insurance premiums to also skyrocket, guys, because there is a record amount of uninsured drivers on the road, and that was the biggest increase I saw on my insurance policy more than anything else. The cost for uninsured motorists went up by double, and I decided to drop that coverage as well because it was only $10,000 worth of coverage. So I figured, okay, I can afford to self-insure this part of my policy. I don't have a lot of coverage here with this anyways. It's not worth paying this exorbitant amount. But the insurance company told me that that only applies to medical payments, doesn't apply to actual repairs and damage to my vehicle. So hopefully that's true. And it should be true because I pay for full coverage. I have comprehensive and collision coverage on my Jeep. So if there's damage to the vehicle, I should be able to make a claim regardless of who's at fault. But because of all this madness happening with car insurance, we can expect yet another 7% increase in car insurance rates here in 2024, guys. So people saw it go up anywhere between 20 to 40% in 2023, and we're supposed to sit here and absorb another 7% increase this year and just keep your mouth shut and pay. And what they think might happen from this, they're saying more people might decide to ditch cars altogether. They might start do more car sharing or public transportation, and what it might lead to is fewer and fewer car sales across the board, which is going to hurt the auto industry. And they think they're going to have to be more flexible on the pricing and financing of cars moving forward if this becomes a much bigger problem. And I think this is interesting for a couple of different reasons, because number one, the car market pretty much parallels the real estate market, right? So this is the same problem we're seeing with real estate across the board right now, is homeowners insurance and property taxes, just like we talked about in the video yesterday, are skyrocketing everywhere, guys. So in order for this to become sustainable, in order for people to keep paying these high insurance and property tax rates, what's going to have to happen? Well, the cost of the home is going to have to come down to a more affordable level, right? So people can actually pay all these expenses, especially if you're required to have homeowners insurance when you have a mortgage. Let's face it, no one's getting out of paying their property tax bill, no matter how rich you are, no matter how many properties you own free and clear. So if they're already talking about major changes ahead with the car market because of rising car insurance, that's almost a guarantee we're going to see the same thing play out with real estate. There's lots of shenanigans going on with car insurance as well, guys, because check this out. There's a story which might not sound like an insurance story, but just hear me out because it is. There was this couple that ordered Uber Eats, okay? And it showed on the app that it was going to take 84 minutes for the food to arrive because the guy was walking on foot. So first of all, why would this happen, right? Like Uber, usually they require you to have some kind of vehicle. You have to have a bicycle or something to deliver on, right? What people are saying that's likely happening here is this guy was actually using a car, but he put on the Uber Eats app that he was walking. The reason that he did that, so that way he doesn't have to show proof of insurance and he doesn't have to get an increase on his car insurance, because when you are a part of any sort of ride-sharing app, that's something they always ask you now. When you go to get car insurance, they'll ask you if you drive for Uber or Lyft or anything like that. And if you don't say yes when you actually do, and you get in a crash when you're delivering, you won't be covered. So there's no point in lying, but what it does is it makes your insurance rate go up. And according to Uber's website, they say that all their drivers must maintain personal automobile insurance at a mandatory minimum limits and provide proof of your insurance to drive and deliver with a vehicle with Uber. This guy found a way to skirt the system and say that he was just going to walk the delivery. This somehow enables him to not have to prove to Uber that he has the right insurance for the car. Maybe he has no insurance, guys. So people are going to this length to not have insurance just to be able to save some money. And like I've been saying in a bunch of my videos, guys, people are just flat out broke. This is just yet another thing that proves it. But really, maybe it's not that people are broke. Maybe it's just that the cost of everything has risen so fast and so exponentially that people can no longer make it on a normal or average salary. That's what I believe is actually going on, and that is causing people to be broke. Yet you keep seeing story after story about how the Fed has beat inflation. You know, they're not raising rates anymore. They're not lowering them either, by the way. But all is well in the world. The economy is moving along strong, and there's nothing to worry about here, guys. That's the same narrative we keep being told week after week. But yet we keep seeing stories about how people just can't afford normal things that people used to buy and afford pre-pandemic, you know? Food, gas, car insurance, childcare, all these things. Commuting to the office now is the same cost as eating. Like, this is just getting out of control. It really is. And that's what makes me have full faith that this is not going to last very much longer, because how can it, right? How can people keep putting up with this? Literally, they don't have the budget to. So I'm just sitting here on the sidelines waiting for it to all collapse, because at this rate, I don't see any other possible outcome. So if you guys enjoyed this video, make sure you're subscribed to the channel. And if you don't want to wait for my next one to come out, check out the video on the screen right over here, and I'll see you in the next one.